It's really important when it comes to your trading. And it's basically how you see the markets. A lot of traders don't think about this. And it's kind of like if you were going to meet some people that you didn't really know or you knew a little bit about them. What you would probably do is you'd probably steer the conversation in an area where they're comfortable. For example, you meet some people and they're all tennis fanatics. You might talk about their tennis, right, or whatever. And if you've been around people that are different from you and not necessarily into the things that you're into, that's pretty easy to get along with them as long as you talk about what they like to talk about, right? I mean, it is. So that's the same thing I think with trading, but think about yourself as that stranger, right? So, and this is kind of weird, but it's true. So if you think about what are your biases, like what your trading biases are, then you can deal with the issues that creep up in your trading much easier. So let me explain to you what this looks like on the charts. I think this will be helpful. And oh, by the way, before I forget, if you want to join us in the Building a Small Account Real Quickly course called Small Account Big Profits, you can click the link below or above this video, somewhere around here, to get more information about that. All right, so let's move into the charts and I will share with you my screen. My screen. All right. This actually is not a currency pair. This is coffee. And this is also one of my favorite strategies. And the way that it works is something like this. By the way, if you don't have CFDs or you're like, how come my broker doesn't have coffee? You probably live in the United States. That would be my guess. And so that's why you don't have these. But if you live anywhere else in the world, fortunately for you, you can trade or a lot of brokers will allow you to trade CFDs. So what that means is you can trade coffee, natural gas, and oil, and gold, and silver, and all that stuff, right? Now, here's why I love, love, love this strategy. The idea is that first, you establish a floor or a ceiling. It doesn't matter. In this case, we've established a floor on coffee right around here, right around $1.15, $1.15.22. So it bounced here in 2015, 2016. It touched it briefly again in May 2017. And then you can see again, came in here February to May 2018. And then it broke through. It found another floor down here at 99 cents, basically. It's 98.97. So it's basically 99 cents. It tried to briefly stay above $1.14, which is that critical level that was established back here, and then it fell back down and found the floor here, and now we're below this floor. That floor, which was established way back in February 2019, and then it fell through. And so now what's happening, I'm going to zoom in now because I know it's kind of difficult sometimes to see these candles on these webinars or these videos. So what I'm looking for now is basically one of two things to happen. One is that the market may come up to here and then touch that 99 level and then move away. Or two, I'm going to just change this so that it's not array. Could come up to here. It could give a bearish candle around 99 cents and then bounce off of that, and I'll short it. If I get a bearish candle up there, I will definitely be a seller. And we'll be buying and selling CFDs and mostly currencies in the small account big profits course, but we'll be doing some CFDs too if the opportunities arise. But another thing it could do is it could actually blow through here and go to the next level up here. And that would be okay too, so long as it got up there to 114.20 and then gave me another bearish candle. Then again, I would short it. I would short it and sell it. And what's nice about that is if it goes that far, I actually have a really lovely target all the way down here at 92.60 where we're at. See, a lot of traders are probably looking at this kangaroo tail that formed last week these are the weekly chart, by the way. I should have mentioned that. And they're thinking, wow, it's going to go up. Well, they were probably thinking the same thing here, and that didn't work out so well, did it? So I think we're in a very strong downtrend, and I think it looks great for the market to come up and either bounce off 99 and I can sell, or 114.20 and I'll sell. Now, so why is this so important and why am I telling you this? Well, The basic reason why is because I understand that I like these retouch trades, first touch trades, or pinch trades. There's lots of names for them and different rules and all that. Blind retouch trades, whatever. But the important thing is I like looking at the market from support and resistance point of view, and I really like to trade these because they offer, hey, Yam, hey, Adnan, welcome, guys. Good to see you here, guys. All the people here that are here live, welcome aboard. I like them, but you may not like them. What I found from giving a quiz to traders around the world is that most traders like to trade the end of the trend. That's not necessarily good. That's not necessarily bad. I will say, however, because so many traders actually like to trade the end of the trend, that's why I use these open position ratios that you can get from many brokers around the world, like I think you can get it from FXCM, actually. You can definitely get it from IG Markets, Saxo Bank, all these brokers, they offer this. And we'll use this a lot in the small account big profits course to use it as a trend indicator. But I know that most traders, when they see a strong trend, they like to go against it. So for example, right now, one that I'm kind of hunting for trades on is the Swissy. And if I look, where is it? Down at the bottom, isn't it? Yeah, there it is. If I look at this Swissy here, I notice that all these traders are actually they're looking to sell. 79% of them are selling the Swissy. So I want to definitely go long. I want to be in the other group because I know most traders like to go against the trend, and I'm also actually currently long the yen as well, which is the last one down here. I don't know if you can see that. That last one down here, 65% of traders are actually short the yen, and I'm long the yen right now. So a lot of opportunity here to take trades against the crowd, knowing that the crowd likes to go against the major moves. But that might not be you. Maybe you like, for example, instead to trade the trend. So you'll always be looking for trend trades. We talked about in other videos about trend trades, volatile trends, not so volatile trends, Darvas boxes, trend retracements, going against the retracement move where it kind of makes a bearish or a bullish flag. All of that stuff's great, but know who you are, know what you want. Instead of scrolling the internet trying to find like the best strategy, which is what I used to do. I did that for 4 years, over 4 years, and it screwed me up. Now what I've done is I've approached it from a different way. I say, well, what do I think is obvious when I look at the charts, and can I build a strategy around that? And that's basically where I am today. If I see things on the charts, I say, yep, that makes sense. Yep, I think that's true. Yeah, I think that's a reality of the markets. I can build a strategy around that, and you can too. All you have to do is determine, do I like to trade the end of the trend? Do I like to trade breakouts? Do I like to trade ranges where it bounces off channels or boxes or whatever? Do I like to trade the end of the trend? All of those things are great. Just construct a strategy around that. And what you'll find is that some strategies lend themselves to hard targets and some to trailing exits and things like that. We'll talk about that stuff in another video, but for right now, I just want to share with you the reality is that if you don't trade what your beliefs are, you won't trade it long term. You'll give up. Just like if you meet somebody, and we were talking about earlier, you meet somebody who you don't really know that well, if you don't talk about something that they like to talk about, like themselves, for example, they won't think you're a good conversationalist. And same thing with trading. If you don't trade something you believe in, you're not going to think it's a good system. It just comes down to that. I wouldn't risk 5% unless you were comfortable with the drawdowns. There are plenty of great brokers. I would just go to Forex Peace Army and look at the reviews. Yeah, so definitely, if you want to go back and look at their other videos that we talk about the risk calculator, and what you want to see is, well, I can do it right now. That's fine. I'll do it right now. So let me go to, I'll show you. So let's say that you have a system and you have a 5%, you want to do 5% risk. By the way, I'll put the link down below this video, but here's something, because this comes up quite a bit. Let's say you have a 35% win rate and your reward risk ratio is 3 to 1. And you're like, I'm going to risk 5%, but I really don't want to have, over the next 10,000 trades, I really don't want to have a 70% drawdown, okay? Now, any bets on what's going to happen here? So this is how I use it. There's a video here that shows you how to use the calculator. You just click on the calculator, and guess what? I have a 97.4% chance, 96, 96, 95, 96, 99, 97. So I am going to have a 70% drawdown if I'm risking 5%, and I have a 3-to-1 reward risk ratio and a 35% win rate. Now, obviously, I can change if my win rate is different. Like I might have a 2-to-1 reward risk ratio, but a 55% win rate. If that's the case, am I going to have a 70% drawdown? No, very, very unlikely. But I would ask you, which one would you rather trade? Which one's going to make you more money, right? So, but maybe it's not 70%. Maybe your number is 50%. Maybe if you lose half your account, you're going to freak out. You can see here you got basically a 4 out of 10 chance of having a 50% drawdown, even though you have a 55% win rate, 2-to-1 reward risk ratio, which is pretty good for that win rate, and then you're risking 5%. So I would encourage you to play around with the risk calculator. If your question is, what should I risk this amount? My answer is, what kind of drawdown are you willing to tolerate? We talk about this in the Small Account Big Profits course. You can click the link below or above to get more information about that. But really, we approach it from that point of view, is if you're trying to achieve this with your trading, what's going to happen on your path as you go there? If you're going to have a 70% drawdown and you're only prepared for a 30% drawdown, freak outville, right? And it's not going to work. But if you go, look, I'm okay with a 90% drawdown. If I lose 90% of my account, I'm going to keep going, knowing that I'm being aggressive, knowing that if I just roll the dice here, I could blow up my account, but I could also, within 2 years, get a significant chunk of change. Then maybe it's worth it to you. So hopefully that makes sense, okay? What up, Black Panther? Everyone's showing up now. So yeah, take a look at that risk calculator, and I'll put it here for you. I'll give you the link. If you haven't seen it, it's really a good idea to plug your numbers in there and make sure that you know sort of, and I'll put it below the video for those of you watching the recording so that you know what's going to happen basically. And I always put 10,000 trades in to be very conservative. I know a trader, he won't trade, pretty well-known trader, he doesn't like a 5% drawdown. That freaks him out. So you just have to adjust your risk, assuming you're using fixed fractional risk management accordingly. Okay, cool, guys. Hey, thanks so much for subscribing and watching these videos. And if you want to join us in Small Account Big Profits, still available. Click the link below or above. I will see you in the next video. Take care. See ya. Bye. Naked Forks is a Bible for you. Awesome. I hope it helps. See ya. Bye.